The Little Book of Common Sense Investing, Summary Outline. Introduction, the most important thing you can do as an investor. The case against active management. Bogle argues that most active fund managers underperform the market after accounting for fees. He presents the idea that passive investing, particularly through low-cost index funds, outperforms active strategies in the long term. Chapter 1, The Triumph of Indexing. Bogle provides a history of investing, noting that actively managed funds dominated until the 1970s, when index funds gained popularity. Index funds, which track a broad market index like the S&P 500, typically perform better than actively managed funds over long periods due to lower fees and fewer transactions. Chapter 2, The Power of the Markets. Market efficiency. Bogle emphasizes the efficient market hypothesis, which states that stock prices reflect all available information. This makes it nearly impossible to consistently outperform the market through active management. Long-term growth. Over long periods, the stock market tends to rise, driven by the growth of companies and the economy, making it a beneficial place for long-term investors. Chapter 3, The Investor's Dilemma. Costs matter. One of Bogle's central points is that the lower the costs of your investment, the higher your returns will be. High fees, high turnover rates, and frequent trading all eat into returns. Expense ratios. Index funds are known for their low expense ratios, making them more cost-efficient compared to actively managed funds. Chapter 4, The 4 Pillars of Successful Investing Asset Allocation. Bogle advises investors to diversify their portfolios to balance risk and return. Asset allocation involves deciding how much of your portfolio to allocate to stocks, bonds, and other asset classes. Time horizon. Long-term investing is essential. The longer you stay invested, the more likely you are to achieve favorable results, as short-term market fluctuations become less important. Risk tolerance. Understanding your own risk tolerance is critical. The more volatile the asset, the higher the potential for both returns and losses. Costs. As emphasized, low-cost investing is key. Minimizing fees is one of the most important ways to maximize returns over time. Chapter 5. The case for indexing. The statistical advantage. Bogle points out that index funds offer the statistical advantage of low costs and market-wide diversification. Even if they don't beat the market, they typically match or slightly outperform most actively managed funds after fees. Index funds versus actively managed funds. The book discusses a wide range of studies comparing the performance of actively managed funds to index funds. On average, actively managed funds fail to outperform their benchmarks, especially after costs are accounted for. Chapter 6. The Real Costs of Investing. Trading and turnover. Excessive trading, even in actively managed funds, incurs additional costs. These can erode any potential gains from short-term movements in the market. The hidden costs. Investors often overlook the hidden costs, such as taxes on capital gains, commissions, and management fees. Bogle argues that a buy-and-hold strategy within low-cost index funds minimizes these hidden costs. Investing for the long term. Bogle advises investors to think long-term and ignore short-term market noise. This could mean holding investments for decades with the expectation that, over time, the market will provide positive returns. The importance of staying the course. One of the key points of the book is not to react emotionally to market fluctuations. In times of volatility, investors should focus on the long-term trajectory and maintain their position. Chapter 8, The Role of Financial Advisors. Avoiding conflicts of interest. Bogle discusses how many financial advisors are incentivized to recommend higher fee products that may not be in the best interest of the investor. He recommends working with advisors who are committed to low-cost, efficient strategies like indexing. Education and empowerment. He encourages investors to educate themselves about their investment options rather than relying on advisors who may benefit from selling high-cost products. Chapter 9. The Real Secret to Investing Success. Patience, discipline, and a long-term view. The secret to investing success is not market timing or picking the next hot stock, but practicing patience, maintaining discipline, and adhering to a long-term strategy of low-cost, diversified investing. Bogle's Golden Rule. Minimize costs, diversify broadly, and stay the course. This simple strategy, when combined with a long-term mindset, will lead to the best investment outcomes. Chapter 10. Why low-cost index funds are the solution. Benefits of index funds. These funds offer a low-cost, diversified, and effective way to gain exposure to the broad market. By investing in index funds, you are guaranteed to get the market's return, minus a small fee. The Vanguard story. Bogle reflects on his creation of Vanguard and its mission to offer low-cost investment solutions. Vanguard is known for being one of the largest providers of index funds and has become an icon for passive investing. Key takeaways. Cost efficiency. The most important factor in investing success is minimizing costs. The lower the fees, the higher your net return over time. Diversification. A diversified portfolio is key to reducing risk and maximizing returns. Index funds provide an easy way to achieve broad market exposure. Patience and long-term focus. The stock market will go up and down, but over time it trends upward. Investors should focus on long-term returns rather than short-term fluctuations. Market efficiency. Trying to beat the market is a fool's game. Index funds, which track market averages, have historically outperformed actively managed funds over the long term. Conclusion. John C. Bogle's The Little Book of Common Sense Investing is an accessible and practical guide to investing for individuals who want to build wealth without getting caught in the complexities of active trading or high-fee investment products. Bogle's advocacy for low-cost index funds provides a straightforward path for achieving solid long-term returns with minimal risk and effort.